Hey, this is June from Turning Point Life Investment, and this is your chart of the week. So in this video, we're going to talk about how to utilize candlesticks and certain technical indicators as risk management. Now, I've mentioned before that candlestick patterns contain a lot of information. Each candlestick tells a story, but there are certain candlesticks that will provide you with even more clues as to what's going on with the market. So let's assume we are long in this stock. Let's say we bought somewhere around in the 70s and we're still holding on to this stock. Now, just looking at the chart alone without looking at any candlesticks, we can already tell that this stock is starting to get overstretched. Okay, first thing you notice, the stochastic is overbought, as you can see right here. Also, prices are stretched out from its moving averages. And I've mentioned before where when prices get really stretched out, it has to come back and tag the 20, right? Or at least it's reaching that stretched out condition, right? Kind of like a rubber band. And the main thing that you want to take a look at is notice where prices are in relation to the previous high. Pretty darn close, okay? So without even looking at the candlesticks, just looking at the indicators alone, it's already telling us that we should either start taking profit or moving our stops a little bit higher because it's reaching some pretty overstretched and pretty critical resistance level. So going on to the next day, you see we produced a type of bearish reversal candlestick. This is also known as a shooting star. Now, a shooting star by definition is where you have a small body, okay, which is this little white candle right here, but you have a very long upper shadow, which is this tick or this line right here, usually by 2 or 3 times the length of the body, okay? But the longer the shadow, the more significant that shooting star is. And just with any type of reversal candlesticks, it must come after a certain trend. All right, in order for this bearish reversal to have any significance, it has to come after an uptrend, because by definition, it's a bearish reversal, meaning that it's reversing this uptrend into a bearish momentum. If you were to see this shooting star somewhere in, let's say down here, or even in the middle somewhere, it doesn't have the exact same effect. Now, what makes this candlestick, this shooting star, even more significant is, as I mentioned, we are very close, or actually we are right at that resistance level. And notice what happened with the candlestick. Prices went above this previous high, but it immediately got rejected, meaning that buyers were unable to hold prices above this level. So in some sense, you can even say that's a head fake. Now, a good confirmation to this bearish candlestick would be a break underneath the bottom of that candlestick. If traders are able to break underneath it, or even better, close underneath that candlestick, then that's a pretty good sign or a pretty good confirmation that this is a pretty significant top for this particular stock, especially since it's right at the previous resistance. Okay, so again, moving on to the next day, we actually got that confirmation. Again, we noticed that prices gapped up higher, but immediately, right, it got rejected once again. So you can see how buyers tried 2 days in a row trying to trade above this previous high, but it failed to do so. And that's actually pretty bearish if you ask me. And also, if you notice this pattern, this is actually a bearish engulfing pattern where you have a large candlestick, dark candlestick, completely covering or erasing the prior day's action. And on top of that, you notice how there's some volume spikes up here. So again, it's telling us that the stock is hitting a very significant top. So in terms of trading, when I see something like this, and let's say, as we mentioned, we started going long somewhere here, and when I see something like this, that tells me I should get out of this stock. As I mentioned, either take profit or move my stops higher up, because this is somewhat foreshadowing, okay, dare I say, that there's lower prices to come. So as we know, what happened to RIM, we all know what happened to RIM, right? They released bad earnings. But even if you did not know that earnings was coming out, just by looking at the candlesticks, looking at how it reacted to the previous high, overbought stochastic, getting pretty stretched up from the moving averages, if you combine all of that, okay, whether you knew earnings was coming out or even if it's bad or good, that really didn't matter because the charts are already telling you to get out of this stock prior to the event. So again, this is why it's so important to really know how to use your candlesticks and really know how to use them appropriately, and also combine them with certain indicators to add to the strength of the pattern.